Liquidity is arguably one of the most important things that you need to master when it comes to day trading, and the reason for that is it is what price action is targeting when it is moving. Now, there is liquidity absolutely everywhere in the market, but finding the strong draws on liquidity is what is important. For example, right here, what do you see? These are called equal highs, and equal highs in the markets are created when price action comes to the exact same point in the market more than once without sweeping that level. For example, right here, as you can see, price is resting at this point in the market with two separate candles and two separate wicks. So this is simply called equal highs. Now, equal highs are one of the strongest draws on liquidity. Now, I enter long positions from bearish fair value gaps. As you can see, we have a bearish fair value gap right here. We then get a candle close above this bearish fair value gap, so I will enter into a long position. My stop loss is simply if we get a candle close back below this now inversion fair value gap, and then I know that these equal highs have such a high chance of hitting in the market, so this will be where my take profit is. Now, this model has over an 80% win rate, and I trade it live every single day in my Discord. If you want to join my trading community and watch me trade live, the links are all in my bio. My unpopular opinion when it comes to trading is that breaks of structure, market structure shifts, and change of characters are all a waste of time in the market, and they are all irrelevant. You only need fair value gaps and liquidity to become an extremely profitable trader. For example, right here, if we are looking at this price action, as you can see, we have had a market structure shift or change of character, break of structure to the downside. Now, with this in mind, what that means if we are going along with that market structure shifts and breaks of structure, etc., means that price action should keep on going down. And then, as you can see, we also have this bearish fair value gap in the market. So what a lot of ICT traders will do after they see this shift in the market structure and then they find a bearish fair value gap, they will look for shorts from bearish fair value gaps. But what you really should be doing is seeing this as a sweep on sell side liquidity, then waiting for this bearish fair value gap right here in the market to have a candle close above. What this means is that we have disrespected this bearish fair value gap, meaning that price action should come up and take some sort of buy side liquidity, or at least tap into an unmitigated bearish fair value gap. Now, I trade live every single day on my Discord, and I have over an 80% win rate. If you want to watch me trade live and join my trading community, all my links are in my bio. You need to learn what an SMT is and how to use them in the markets, and I'm going to teach you how. All an SMT stands for is a smart money technique divergence, and the way that we identify these in the market is we find two correlating pairs. For example, right now I'm looking at Nasdaq and the S&P 500. If we are looking at the Nasdaq here, as you can see, this wick of the candle has not swept the high at 1023, whereas if we are looking at the ES chart, as you can see, the wick of this candle here has swept this high. Now, this is simply a bearish SMT in the market because one of the correlating pairs has swept a high in this example, and the other correlating pair has not swept that high. Now, this means that there is a bearish SMT in the markets, and the way that we are going to use bearish SMTs is if we then was, for example, to get a short setup on either of the correlating pairs, that means that the short setup has more chance of working with the SMT than if there was not an SMT. So if you want to find those higher quality setups in the market and you see that there is an SMT, then that just means that the trade you are looking for, if it is following along with the SMT, is more likely to work. One of the biggest mistakes that new traders make is missing out on the perfect trades in the market that you 100% should be taking. When you are looking for the perfect trades in the market, you just need to be able to read the market. We currently have a bearish SMT, we have also swept buy side liquidity, and we are also respecting from a higher time frame bearish fair value gap. Now, when I am looking for shorts in the market, I will never take shorts from bearish fair value gaps. What I will do is I will use fair value gaps a lot differently than how most people are used to using them. I will not long from bullish fair value gaps, I will short from bullish fair value gaps. And the way I do that is I simply wait for bullish fair value gaps to be disrespected. As we can see, we have a candle close below this bullish fair value gap, so I will enter into a short position targeting the swing low here, which is sell side liquidity, which is an extremely strong draw on liquidity. Now, this model has over an 80% 100% win rate, and I trade it live every single day in my Discord. If you want to join my trading community and watch me trade live, the links are all in my bio.